Hello and welcome back to the channel. Stocks are hitting fresh highs, but for anyone watching mortgage rates or thinking about buying or refinancing a home, the more important story is what's happening with the labor market and bond prices. Yesterday's ADP employment report came in softer than expected. Private employers added just 44,000 jobs in July, well below the 70,000 that analysts were looking for. The prior month was also revised a bit lower. Most of those new jobs came from education and health services, especially healthcare. Other sectors have been much quieter. The leisure and hospitality sector actually lost jobs after the temporary boost from the World Cup faded. Wage growth for people staying in the same job held steady around 4.4% year over year. People who switched jobs saw bigger raises, about 7%, but overall the report points to a cooling labor market. Why does this matter for mortgages? When job growth slows, it often reduces pressure on the Federal Reserve to keep rates higher. Mortgage bonds improve slightly after the weaker data, which is a positive sign for rates. Looking at last week's mortgage application numbers, rates moved up to about 6.8%, roughly where they were a year ago. Purchase applications and refinance applications were little changed from the prior week, but compared with a year earlier, purchase activity is down 3% and refinances are down 9%. That's the first stretch of back-to-back year-over-year declines in a while, showing that higher rates are still weighing on the housing market. Technically, mortgage bonds are testing some important levels. Momentum indicators are starting to look more constructive, which could support further improvement if the data continues to cooperate. Two big things to keep an eye on: any news about oil and the Strait of Hormuz, which could move energy prices and broader markets, and Friday's official government jobs report. The ADP number doesn't always match the official figures exactly, but this weaker reading suggests Friday's report could also come in soft. For homebuyers, a cooling job market raises the odds that mortgage rates could ease over the coming weeks or months if the trend continues. For current homeowners, it may open a better window for refinancing down the road. Rates remain elevated compared with recent years. Stay tuned to the upcoming jobs numbers. They'll be a key piece of the puzzle for where mortgage rates head next. Like, share, and comment below if you like this content. Stay tuned for the next one and have a wonderful day.